Good morning, traders. It's Tuesday, February the 13th. Taking a look at the charts on the the right-hand side here, we've got the daily chart of the SP 500, the SPY ETF, and on the left-hand side is our trend analysis, the 30-minute chart of the SP 500 futures, and this kind of jagged moving average here is the 20-day moving average overlaid on the daily. So each time you see this step down, that is one trading session, and these are the 30-minute intraday bars that trade within that session. So the 20-day moving average is pretty key on the overall trend of the market, along with the 5-day for momentum traders. So obviously we have turned below here. We've gone into a neutral market, and then finally the momentum and everything is carried through. We've got red bars indicating we are now into a downtrend at this point. The market is trying to put in a bottom, but it has yet to do so. Now, if you look at this is actually pretty interesting. I don't think a lot of people noticed, but we saw the SP 500 sell off. This is the big sell-off day that we had, and then we had a rebound, and then the following couple sessions we saw it sell off and move down to new lows. Now, believe it or not, if we just go over to let's just go to the SP 500 futures chart, go to the 30-minute chart, and zoom out, it's actually a double bottom. It looks during the big sell-off on the equities market the other day, um, the market's more or less closed right about here. And in overnight trading, we saw stocks continue to sell off in overnight trading. European markets sold down. We saw a huge sell off in overnight trading that the average trader doesn't know that this happened, that we saw a huge continuation crash through overnight trading. And then the market opened the next day, more or less relatively flat, and then had a nice big pop to the upside. Now, the following couple sessions, we saw the market continue to stair step its way down with these bear flags and ended up uh, moving way down here to the downside, looking like a new low on the regular chart if you're looking at ETFs or just regular trading hours, but really it was a double bottom in the market. And we've come down, we've had this bounce up, we've come down, we're bouncing up, we're plateauing here. If we can break this high, a double bottom or a W formation, when you break this high, you get a very strong move to the upside. And of course, this range here from the top all the way down to the bottom is a huge range. So if we break that, usually you double that and you go to the upside. So we'd go back up to these recent highs fairly quickly. So it's kind of interesting that if you look at the futures chart, you realize it was a pretty much perfect double bottom. I think it was one tick off. This was one tick higher than what this was, which is pretty amazing. Buyers were waiting for that price to come down, and it tagged that level, and they bought back into the market. And so now we're flagging here, looking for an anticipation eventually for this to consolidate long enough, build up enough energy for a move up to break out to the upside. Now, if we just go back to the daily chart and back to this cycle here, if we look at these charts, let me zoom in a little bit here. Overall, the cycle analysis is showing that we actually have a downward bias more or less for most of today's trading session. We should see actually for the next two trading sessions, the cycles are to the downside. So we could very easily see the market kind of just move lower and flag here, kind of build hopefully what would be a bull flag where the market rallies, moves up here. We see a nice strong move and it kind of just flags here, consolidates, and then we see the second half of the move try to bring us up to this would be the W high right across here. Again, if you're looking at futures, the market actually sold down to here, rallied back up to here, came back down to here. And so this would be the significant high that if we run up, we could flag here as it tries to break out. And once it does break out, we could go right back up near the highs of the market here. Anyway, taking a look at the overall cycles here, we are looking at potential flag for a couple days. And if you look at the daily chart, we should probably see price. Today futures are trading slightly down. They're down about 0.4%. So we could see a couple days of sideways action here. The market still has high volatility, so we could just see price gaps as it chops around and consolidates. Again, we're hoping this is going to end up being a little bit of a bull flag and for us to see a rally up to the top of this W formation right across here, and then potentially come back up and maybe tag this 2800, which is a whole number. It's also a level where the market more or less let go and completely collapse from. So that's kind of what we're looking for going into more or less mid-March going forward. Let's take a look at the rest of the market here. If we take a look over at Let's pull up the gold here. Gold's relatively flat on the session. More or less, it's trying to find a little bit of a bottom, but again, the overall pattern here is more or less to the downside. It's holding, it's kind of mixed here with moving averages. It is under resistance. If we just draw a line right through the heart of this stuff here, it is under resistance right through that. Where lots of volume traded through here, acted as support, support, broke below it, and now it's coming up and it'll be under resistance. And technically, this is a little bear flag forming, and we could easily see gold sell down. And we have been expecting it to hit this 1300, and who knows how much further it will go if it does hit that level, but 1300 is a whole number, should act as at least an intraday. First time it touches it, should act as a support if you're a day trader. If it tags 1300, you should expect an intraday bounce for a quick play. But overall, this overall move here shows we could end up falling and dipping a little bit below that 1300 still. And ideally, gold moves the best, or any asset moves the best after it has a flush out and breaks a critical support level, because that's what scares everyone out of the market, puts contracts, shares into hands of more comfortable, longer term holders, and creates for a stronger and longer rally going forward. So either way, gold, precious metals, they've all had a nice strong bounce the last two sessions, but the question is, are they going to have follow through, or are they going to roll over here and go down? So take a look at silver. Had a nice big pop there yesterday, up 2.2%. Again, it's bounced right into resistance. If you were to just look at this consolidation level through here, right through where it consolidated, it came right up. This morning, it pushed up into that consolidation more and sold back down already. Cycle analysis actually shows that we could see silver continue to underperform here for a little while, and we still have a significant low way down here that silver could hit. So I do feel as though if the equities market in general rallies, money is going to flow out of the safe havens and continue to flush down. So gold, silver miners could continue to flush down and carve out a longer term bottom that could take several weeks before we see them potentially put in a bottom. And maybe April, halfway through, March, we could start to see the precious metal sector put in a real bottom and start to rally as the equities market puts in more or less a top we're expecting based on cycle analysis. Looking at gold miners, GDX, big washout low, rebounded yesterday, had a strong close up at the 5-day moving average. The juniors had a little more whipsaw price action, but again, it's rallied back up. It's trading through these upper bars here. It is holding up fairly well, but still at resistance. And silver miners, they were up 4.3% yesterday. Huge pop to the upside. But again, it's a 1-day pop. The question is, does it have any follow through, or are we going to see this? Is this just a short covering pop, which is what it somewhat feels like at this point still. Looking over at natural gas, it's up almost 3% this morning. We are getting down deep into this lower support zone in the market. If we zoom way back in time here, you can see here we're getting back down to these critical levels here. It's starting to put in a bounce. It is still trading under this 5-day moving average, following it tightly to the downside. We'll see if it can start to have a reverse. Overall, for yesterday, or today actually, is the first day it's starting to finally have a little bit of a bid in here, but more or less I think it's an oversold little pop. We could see this struggle and chop around for a little bit in the bottom, very similar to over here. You see it put in a low and pop and then fade back down, and we'll see if it can lose some of this downward momentum and start to stall out and carve in a bottom that could set up for a strong pop and extension, very similar to what happens over here. You build a little base and then it pops, holds up tight, and you see it take off and continue to rally. So that's kind of what we're looking for there. Crude oil down 0.9% this morning, continues to unwind from this little head and shoulders formation we are watching. We've got most of the moving averages rolling over. Looks as though crude oil can continue to fall. These blue lines are long-term support and resistance levels from way back on the chart, and the next target here is around the $57 per barrel mark, which is right through this the heart of this big consolidation here, which acted as resistance, went underneath it, resistance, finally popped above it, support, held as support, broke below it, started to trade through it. So this is where you put high volume. Expect lots of volume trading in here, and that is where price will fade back down and should act as support. So that's kind of what we're looking for there. And then crude oil could slowly etch in a bottom here and consolidate. If we look at the energy sector stocks, they've been under some pretty serious pressure. Most sectors in general have a very similar pattern. Huge sell-off with big volatility. It looks as though we're trying to carve out a longer term significant low in all the equities markets in general. So it feels as though everything here should be bottoming over the next week or so and carving in some high volatility kind of chop here before it potentially pops and we see a relief rally and money move back into equities. There was so much volatility in the last week that the volatility is here to stay for a little bit. It's going to take a few weeks for it to really dissipate. And if you look at the VIX here, you can see how it's had a huge pop and it's kind of just consolidating here. It takes a long time for longer time than normal for fear to fade. And fear does fade very quickly considering the amount that we had. It's only been about a week. Um, More or less, I would say another week or so, or even this week, we should start to probably see this move back down and fade. But right now, everyone's still scared. As soon as they see the indexes roll over and have a red bar intraday, the fear creeps right back into the market. So people are still very scared of another collapse. And time heals all wounds. So as we go on for another week or so, people will start to realize that probably not going to see another crash and sell off, and the fear will dissipate, and then we just see the VIX collapse back down into its ranges, 16 to 9, back down in this kind of comfort zone down here. Anyways, that is it for this morning. I guess the one other thing here would be let's take a look at the US dollar index. US dollar index holding up. It's at resistance. It sold down to the 5-day. We got quite a bit of money moving into the UUP. So it looks like people are expecting, investors are expecting a further continued move in price. And if we see the dollar continue to move up to this next resistance zone around the 24 level here for the UUP, we could see that push down, that sell-off in the precious metals still continue and hit those lower targets that we've been kind of looking for and waiting for going forward. And the other thing is the Bitcoin. This is the Bitcoin trust. It moves more or less like Bitcoin. We talked about a bottom kind of getting put in over here mid last week, Tuesday, Wednesday. We were expecting a low, and more or less this week we are expecting it to pretty much stall out. And now it's kind of in no man's land. We've got that bounce, and now I feel as though it could just chop around and consolidate, potentially fade a little bit. But overall, the majority of this consolidation, I think, has been put in place. This was the kind of the last kind of, I think, sell off to the downside. So I think it's going to start to put in one of these long consolidations here. We have this massive run up, sells down, bounces, sells down to a new longer term low, and then it just kind of bounces and it goes into no man's land until fear dissipates, investors, traders, the average Joe starts to accumulate again and gets comfortable enough to buy, and then the whole cycle starts again. So this recent run up, if you were to just zoom forward, it's the same thing as this big run up, and we're equivalent to something like here or over here. And of course, you zoom back again, the same pattern happened again. Huge run up, pull back, flush down, and then it consolidates for a while until people get excited again. And so it's a cycle kind of repeating. And that's the nice thing about digital currencies is they're more or less a pure play. Well, the Bitcoin is now traded on the futures, so it could start to be a little bit more manipulated. But typically, the digital currencies are a pure emotional raw play, and technical analysis on them does work extremely well. Anyways, that's it for this morning. Take care. Bye bye.